Hello everyone. This is a recap of the market for the price market action that happened on June 13th. Just to ensure that everybody knows me better, in the last YouTube video, my introduction was given as a financial advisor. I'm actually not a financial advisor. I'm a macro analyst who loves to analyze markets, indices, especially the US and global markets. June 13th was a very interesting day. The S&P actually officially entered bear market territory. The index declined 3.88% to 3749, and it was a third consecutive day of gap downs. Again, extremely unusual and shows very negative sentiment. The S&P 500 is now more than 20%, actually 21.8% from the highs that it achieved on Jan 4th this year. And as we discussed in the previous YouTube video, anytime when the S&P 500 or NASDAQ or any of the indices go below 20% of their all-time highs or decline by 20% from their all-time highs, that's when a bear market starts. There's still not a recession because the technical definition of a recession is 2 quarters of negative GDP growth. Also important to note that all the last 3 sessions when gap downs have happened with very high volumes on S&P 500. So a lot of selling happening in the market, showing extremely negative sentiment. The NASDAQ went down even lower. The NASDAQ went down 4.68% on June 13th, Monday, in the price market action. And it is now down to 10,809 in terms of the index value. NASDAQ is down 32.6% from its all-time highs that were achieved in November last year. And this decline is higher than the decline the NASDAQ saw in the COVID pandemic decline of February-March 2020. And by the way, as we all know, that decline was very short-lived. From the highs of Feb, the decline happened by March. So very swift decline, and then the market recovered in a V-shaped recovery. We talked about the yield curve in the previous YouTube video. The yield curve again has inverted. It was last inverted in April. And when we say yield curve inversion, I'm talking about the most well-known part of the yield curve that is talked about, that is 10-year minus 2-year US Treasuries. So at the time of recording this video, the 2-year is at 3.41% and the 10-year is at 3.38%, showing a negative 3 bips yield inversion. Now, also important to note that the 2-year is up 64 basis points since the close of market on Wednesday last week. And this is extremely unusual. Such rapid increases in yield curves or any part of the yield curve typically leads to pressure as borrowers suddenly find their borrowing costs increase, and that leads to collapse as liquidity dries up. The inverted 10-2 yield curve actually has been one of the best predictors of a recession in the last 40 years, ever since people started measuring this. It's now inverted twice, April and then again on June 13th. The only caveat is that typically a recession starts 6 to 18 months after the yield curve is inverted. We'll see what's happening this time around. Now, what happened as a result of the price market action on Monday, or maybe concurrent with the price market action on Monday, is that the prediction of a higher Fed rate hike on June 15th actually increased. So if you look at the CME Fed Watch tool, it now shows a 96.9% probability of a 75 basis points Fed rate hike on 15th June. And interestingly, it has increased from about 3.6% after market close on Friday. These are absolutely unheard of numbers. I have never seen such behavior in the market where the prediction of a particular rate hike goes up from less than 4% to over 96% in one trading day action. So very unusual times. Also, what was interesting to note on Monday was that the crypto markets went into a total tailspin. ETH at the time of recording this video is just above 1100 and BTC is just above 21K. And both of them are down 17 to 18% in the last 24 hours. 17 to 18% in the last 24 hours. And the total crypto market cap has come down below $1 trillion. It's now just above $900 billion. The triggered possibility was a news where Celsius, one of the largest yield providers and lending protocols in the crypto world, froze withdrawals, swaps, and transfers on its platform on Monday. Now, this company Celsius was another very aggressive yield provider, talking about yields in excess of 20-30%, very similar to what Terra of the Terra Luna protocol, which collapsed. That was a stable coin, again providing 20% guaranteed yields, and that collapsed, as we all know, sometime in the second week of May this year. Now, why are such things happening? Whenever there is an aggressive yield provider, that effectively means higher borrowing costs for whoever is taking loans from that yield provider. Because if somebody is providing capital to get a high yield, that capital or that money is being lent to a borrower at an even higher yield. And when you're talking about yields which are at very high rates, the borrowers typically are really, really subprime. And potentially borrowers who are taking money on leverage to buy crypto. And when crypto markets collapse, as they have done in the last 3 to 4 days of trading activity, then margin calls come into play and selling is unmitigated. So it's not in anybody's control, this selling. Nobody's looking at the price of ETH and BTC and saying, look, I need to sell. It's just margin calls which lead to uncontrolled, unmitigated selling. And when things like this happen, there are liquidity issues on any such providers, and that probably led to Celsius actually freezing any kinds of withdrawals, swaps, and transfers on its protocol. What to expect? Obviously, the most important thing to look out for this week is what the Fed does. It seems that a 75 bips hike in terms of what the Fed will do on 15th June is almost a certainty. What will be far more important to see is what the commentary is in the post-Fed hike conference and questions that the Fed Chair Jay Powell will answer on 15th June. So looking forward to the Fed rate hike decision and the commentary in the conference post the Fed rate hike decision. Thank you. You can follow me on my Twitter and Instagram handles at OneRajKamal. Thanks.